What is an asset? An asset is part of a group of things called the elements of accounting, and there are 5 of them. There's assets, liabilities, owner's equities, revenues, and expenses. And we're going to deal with assets, and simply an asset is something the business owns. So that's the easy answer. However, we need to be a little bit more technical than that and say an asset has 3 components. It is an economic resource controlled by the entity. It arises as a result of a past event or a transaction. And lastly, a future economic resource or benefit is expected to flow to the entity from it. So let's look at that first point. It's got to be an economic resource controlled by the entity. It's got to be under the control of the business. The firm decides how and when it is used and not someone else. So let's take an example. Business called Box Hill Furniture has rented a van from Budget Rentals to use in the business to make deliveries to customers. It is valued at $50,000. Is this a resource controlled by Box Hill Furniture? And the answer is no. The business does not control this van. It's being rented. So who does control the van? Well, that is Budget Rentals. They're the ones that control the van. They can make decisions about it, not Box Hill Furniture. So Budget Rentals can decide to sell the van, put new tyres on it, paint it, change it. Not our business, Box Hill Furniture. So we don't have control. So that's a really important thing. It's got to be under the control of our business. Second thing is an asset's got to arise as a past event. That is a fancy way of saying there's got to be a transaction. So a business engages in a transaction with another entity. So for example, let's change it a little bit and say Box Hill Furniture bought a van 4 years ago from Toyota for $50,000 to use in the business to make deliveries to customers. So Box Hill Furniture had $50,000, Toyota had a van, and they switched. That's a transaction. So is there a past event? Yes, there is. There's a clear transaction between Box Hill Furniture and another entity. Now that transaction has happened, we now have the first criteria, which is this is now an economic resource controlled by the entity. Box Hill Furniture owns this van. It controls it. It can decide how to use it or even not use it. It can drive it, not drive it, paint it, change the tires, sell it. It is now an economic resource controlled by our business. Next one, it's got to have a future economic benefit that is expected to flow to the business. So the item must be capable of generating some sort of future economic benefit, and that has yet to be received. It will be received in the future. So usually this is going to be the business will receive money from it. But there's other things that an asset can provide an economic benefit that isn't money. It could be you can sell the asset and get money, or it could be you could just use the asset to run your business. So let's have an example. Box Hill Furniture has a $2,500 Apple MacBook in its office. Will this item provide the business with a future economic resource or benefit? Well, assume we're not going to sell it, so we're not going to get money from it. So those two are out. But an economic benefit can be usage. You can use it. So we're going to say yes, the MacBook can be used by the business to run its office. So that is an economic benefit the business will receive in the future. So you got yourself an asset. So some common assets that we're going to deal with are the business's owner, cash, the money in the bank, but also the cash registers, investments, term deposits, and so on. Accounts receivable or debtors, we're going to see this term a lot. That is another entity that owes us money because we sold them something on credit. Inventory or stock that we have. Properties that we own, but not the ones we rent. We don't control the ones we rent. Vehicles used to drive to and from locations, make deliveries, visit clients, etc. And office or IT equipment, desks, chairs, cupboards, computers, printers, copiers, etc. There's going to be other assets, but they're the main ones that we will deal with. So, is this an asset? The business received $2,000 cash from a customer for the sale of inventory. Is that $2,000 cash an asset? And the 3 tests are economic resource controlled by the entity, past event, future economic benefit. So just take it one step at a time. Is there an economic resource the business controls? Yep, money is an economic resource. The business controls it. It decides how and when it's spent. No other entity has control over that. So that is a tick. Second, was there a past event? Yep, absolutely. The past event in this case was the business made a sale to a customer. That is a transaction. You got a past event. Thirdly, will it provide an economic benefit or resource in the future? Yes, it will. What is that benefit? Well, the business can spend the money to pay for things. So that is an asset. All 3 things are true. Is this an asset? The business has $20,000 of inventory in its warehouse that it bought from a supplier. There's our rules or our test. Let's just take it one at a time. Is there an economic resource controlled? Yep. Inventory is an economic resource. The business controls it. It decides how and when it's sold. No other business can decide how or has control over that inventory. Tick. Was there a past event? Yep, the business bought the inventory from a supplier. That's a transaction. And lastly, what is the economic benefit? We'll sell the inventory and then we'll receive money for it. So that is an economic benefit that we will get in the future. You got yourself an asset. Last example, is this an asset? The business has a property at Chadstone that it bought for $800,000. There's our tests. First one, yep, property is definitely an economic resource. Who controls it? The business does. It decides how and when it's used or occupied. No one else can occupy that premises without our control or authority being given. 2, was there a past event? Yep, we bought it, what was it? We didn't say, but say 5 years ago for $800,000. That's a transaction, so a past event. And lastly, will it provide an economic benefit? It definitely will. We can occupy the property or use it to run our business and make sales. That is an economic benefit. Let's just do the same thing. Let's just change one example and say exact same property. We didn't buy it, we rent it. A lot of businesses rent, they don't buy. We rent for $8,000 a month. Okay? Is there an economic, well actually we'll start from the bottom this time. We'll work our way up. Is there a future economic benefit for the business? Absolutely. In fact, it's the same as if we bought the property. We can occupy it or use it to run our operations and make sales. So we've got a tick. Is there a past event that resulted in acquiring this asset or this item? Absolutely. We pay $8,000 rent each month. That's a transaction. So it's going to be this last point, and it's all about control. Whilst a property is an economic resource, we don't control it. If we only rent it, we can't decide how and when the property is used or occupied. So that is a negative. If the landlord wants to paint it or rent it to someone else or demolish it or renovate it, we don't control that, so someone else does. So the point there is all 3 tests have to be true for an item to be an asset.